Welcome to Markets Now. I'm Michelle Rourke with Naomi Blohm with Total Farm Marketing. We had mostly higher grain and livestock futures trade on Thursday. Naomi, it was nice to see after that big commodity-wide sell-off that we had on Wednesday.
Yeah, for sure. Just nice to see the market have a recover. We had really good export sales, not only for corn, soybeans, and wheat on the weekly export sales, but we had live cattle and hog export sales that had been up from the 4-year average. So that was really great to see. The market finding some support also from a lower US dollar because the Feds decided to keep interest rate unchanged, with hints that maybe in the latter part of 2024, we start to see interest rates come down. So the traders just jumped on that. The dollar went lower. And of course, as you know, that lower dollar is good for export demand. So hopefully we'll continue to see some stronger exports in the coming weeks.
Do you think we also got some, short covering or some technical buying interest just because we maybe pushed too hard on Wednesday when that news came out about Argentina? Were we just a little overdone?
I think that could be part of it. Yes, the Argentina news coming out that they were going to devalue the peso made the markets fall lower Wednesday. We tested some major support levels for the March Chicago wheat near the $6 area and for the soybean contract near the 200-day moving average. Those held. And so a little bit of a technical recovery. And then again, with the dollar working lower and really good weekly export sales and continued iffy weather in Brazil, we're starting to see maybe the market wake up a little bit. Seasonally, there is a tendency for grain prices to work a little bit higher into the end of the year. So we'll see if all of those things can come together and keep an upward trajectory for the grain markets.
Yeah. We've been in such a tight trading range in the corn market. You talk about the seasonals. Will we be able, to see a normal seasonal this year and get through those resistance areas on the charts?
Yeah, that is a big question. So seasonally, there is a strong tendency for corn futures to work higher into the end of the year. In fact, 16 out of the last 16 years, March corn futures have rallied after the December WASDE report into January, and the average rally is 47 cents. Now, something to just really be mindful of, and friends, I want you to keep it real. We have 2 billion bushel carryout for corn right now. So it may be harder to see a bigger rally for the corn market unless there's some perception that demand is picking up or the weather in South America is poor. But I do feel like we'll see a seasonal push higher for corn. But again, just keep it real in terms of what that upside trajectory could be because of the 2 billion bushel carryout number just kind of weighing over things for now.
Yeah, that's a really good point that you make. The other news around the corn market up until recently has been this lower wheat market. Has the wheat market bottomed, and what's the seasonal tendency there? Will those two kind of help each other?
Well, wheat does also have a seasonal tendency that it likes to trade a little bit higher into the new year. And I feel like because we've had wheat cheap enough, we've seen China come in and do some buying. We've gotten enough, just a little bit of weather hiccups happening around the world that there is some uncertainty as far as where production will be, and global demand for wheat continues to be strong, that we could potentially see the wheat market work higher. We still have the funds with those massive short positions. Maybe we see them do some more short covering into the end of the year. I will really emphasize, though, that after the new year, then the seasonals have a tendency to work lower a little bit into the end of January. And there's probably going to be a lot of farmer selling after the first of the year, just because it's a new tax year and taking advantage of any price recovery that we see. So be on your toes, use any rally that we might see to your advantage with your cash markets.
Yeah. When we get up to that $5 marker there around that area, Naomi, that's where a lot of farmers kind of have a bullseye, don't they?
Yeah, absolutely. And 4.95 is resistance on the March corn contract. The next resistance area would be $5 after that. If we could get some friendly news, you could talk about a swing objective that points to 520, but then there is a huge hurdle at the 520 level for March corn. So again, keep it real, friends. We've got 2 billion bushel carryout for corn. That does not justify $6 corn by any means. So unless we see a demand pickup, make sure you're using those cash rallies to make the cash sale.
Yeah. What's your thoughts about soybeans? We've been in this kind of trading range between like 13 and maybe the way top side 13.85, but it's all hinged on what happens with Brazil weather going forward, right?
Absolutely. That's the thing. We're in this holding pattern right now for prices as much as we are watching the weather in Brazil. If there is really any perception that their production, in my opinion, if it's lower than 150, then we've got a reason why the market could trade higher, because right now the USDA has them closer to the 160 million metric ton mark. The Argentina crop, of course, getting better in terms of production. They've had timely rains, but there are a lot of question marks and uncertainty regarding that South American crop. So the other thing, though, we've got tight carryout here in the United States, and so that should keep the market supportive. But on the global picture, again, we're waiting for Brazil, because if they have a great crop, then global carryout actually is going to trend higher. And that's going to be a difficult reason to see a significant rally for soybean prices. One other thing to keep in mind is that with the new renewable fuels demand, if these crush plants can come online, we're going to need to see some more demand for acres and some maybe competition for acres coming forward for the planting year. So a lot of uncertainty in terms of weather, understanding where our crush demand is going to be in the coming months, and just in general knowing and balancing US carryout versus global carryout. So look for kind of a consolidation action for prices for the short term. If we can see the market push up towards the resistance levels on charts for March beans right now, that's coming in at about the 1375 level. It might be a good place to be making some cash sales. But again, I think everything what you said at the beginning, it's all about Brazil right now and understanding where that production is going to be.
Yeah. You mentioned soybean crush. Nice segue into my next question, which is the Treasury Department is supposed to announce, I think by tomorrow, the sustainable aviation fuel credits and how those are going to be handled, whether ethanol is going to be included in that. What are you watching for there?
Well, any hope or glimmer of new demand, increased demand. So for the corn side of it, for corn ethanol, it would be new demand for corn ethanol, not factored in any USDA reports. And that could be a reason why we see perception of 2 billion bushel carryout come down. So I'm watching that. On the renewable fuel side, we'll see if there's anything for soybeans, soybean oil that would indicate even stronger demand than anticipated. So a lot could come out of these reports from the Biden administration. And maybe if we get some friendly news, we could finally see the markets having that seasonal push higher. We could finally see the funds have a reason, a fundamental reason to get out of some of these short positions and go to the sidelines, and then just exiting short positions would be enough of a reason to see the market have a rally. So that's another big piece of the puzzle. Hopefully we get some good news in the coming day.
Right. The other thing we're going to get tomorrow, Naomi, is NOPA crush. Do you think it's going to be another record?
I'm just not sure. I think it's going to be a good number. We'll see if we have the record number there. When I look around at basis levels in the country, when I'm talking to producers, from what they're saying, all of their crush plants are running strong. They're running online. So we'll see if it's a record enough to maybe make the market push higher in and of itself because of record production for the month. But we'll find out tomorrow at 11 o'clock.
What about this cattle market? A nice update here today. How much more do you think we can recover in this market? I think a lot of producers want to know.
Yeah, we have just, of course, as you know, been in that downtrend line, but we have been knocking on the door of technical overhead resistance. So on the Feb live cattle, 168 is some significant resistance for the market. It's the top of this short-term downtrending line, and it's kind of been the high price for the past few days. If we can get some fresh fundamental news to justify a price push higher, then I think you're looking at something more like 176 for an upside correction. That would give us closer to either like a 38% correction or maybe even a 50% correction from this really steep sell-off that we had. Maybe we also see some short covering into next week's cattle on feed report. We've saw really good export sales for this week, so that was supportive news. And especially with the dollar working a little bit lower, maybe we see further export demand, especially with the price correction that we've seen here. Keeping an eye, of course, on domestic demand is important. But hey, fingers crossed, maybe we're going to finally get that upside correction that we've all been waiting and watching for.
Yeah, and you mentioned consumer demand, and with the stock market hitting record highs, there's got to be, some correlation to some consumer confidence and buying beef and whatnot, right?
Yeah, that's a great point. I hadn't thought about that, but I think you're really right, Michelle. We have the stock market just going sky high, which is a feel good thing for the end of the year. Maybe allows people to want to go out and celebrate a little bit more for the holidays and go for or splurge for that steak or that prime rib if they're going out to eat. So maybe we do see a little bit of an uptick in demand. And when people see their 401k getting a little bit bigger, you're right. It absolutely adds some confidence.
Will that same thing, Naomi, happen in the milk market? It's been a real disappointment here in terms of where milk prices have been for the latter part of the year.
Yeah, that milk market just really kind of stuck, isn't it? So, with milk right now, we've had the last few milk production reports showing production just edging a little bit lower, but we haven't really seen a big uptick in any export markets. We've seen just kind of complacent prices for cheese and butter. So, we're waiting for Monday's milk production report for some fresh sign of fundamental news. And then we'll keep an eye on the export market as well. So fingers crossed we get some friendly news on Monday and the market can have a recovery rally into the end of the year.
Yeah. You would think cheese, butter demand would be better this time of year, wouldn't you?
Well, absolutely. And of course, when I'm at the grocery store, everybody's carts are full of, cheese and butter,
Yeah.
especially for baking. So you would think demand would increase, but it just feels like the market hasn't been, showing it or showing really any big signs of life. So I'm not quite sure if demand has just been constant or expected, or if we've actually seen anything as far as a new uptick in demand. So we'll be keeping an eye on those values as well.
Okay. Always a pleasure. Thanks so much for joining us, Naomi Blohm with Total Farm Marketing.
Thank
That
you.
is Markets Now.